Hey, welcome back, everyone, to Simply Trade. So, in our podcast, we, as all of you know, and I know we get some folks here on our show that are in trade, and then we get some people who, because of all the trade talks and everything that's going on in the news, kind of straggle and bump into our show, which is awesome. When our episodes are growing because of that, which is really cool because it's being discovered by non-practitioners, which is a really neat thing. But in today's show, we have a guest, which, in my opinion, is going to kind of like level set or kind of like bring everything into perspective as to what goes on in the background, let's say. So we're talking about, shipments come into the US, we pay duties, and we pay added duties and tariffs, um and the product gets in and gets distributed and consumed in the United States, so in general, right? But it's not that easy. It really isn't that easy. We talk a lot about, of course, this tariff stacking and everything, all those laws and legislations and everything that's going on. So putting that aside, there's another part in the business, that you, as an importer, have to guarantee and assure to U.S. government, in this case CBP, that those tariffs and duties will be paid. You got to guarantee that that's going to happen. It normally almost doesn't come out of the importer's pocket directly. In other words, like when it crosses and it gets cleared and the shipment gets cleared, it's not like they're writing a check and saying, here's your tariffs and duties. Usually that is done through a process or a method. And of course, I'm going to be corrected if I'm wrong, but a process or a method of going through getting a bond, because there's absolutely no way you're going to be able to import anything into the United States if you do not have a bond. That much I know, and I'm nowhere even near qualified to be talking about that. So because of that, we have a guest on our show, and that would be Mr. Jason Weiselman. He is from IBNM, International Bond and Marine. I know I'm gonna mess that one up, but anyway, he'll fix it. He'll fix it up. But anyway, so Jason, welcome to the show. And by the way, Jason reached out. We usually run into each other and at different conferences such as NCBFA, especially the NCBFA ones, because those are deal a lot with brokers. And so we have him here on the show. And Jason, and excuse me, and sorry if I messed up anything along the road, but please do correct me. And thank you, and welcome to the show.
Thank you, Lalo. It's great to be here, and I've become a fan of what you guys are doing, and I think it's great covering trade. And um, the company I've been with for 20 years is International Bond and Marine, and we are a surety agent, so we're a bond provider to this trade industry, and we very much support logistics professionals nationwide, and we're excited to be here today for sure because for as long as I've been in this industry, bonds have been sort of this very calm seas and easy process for importers to attain a bond, and with naturally with the tariff environment and the chaos it's caused a little bit, it's for the trade. It's higher duties mean higher bond amounts are need to be required. So all of a sudden, for the first time, bonds are now something that people have to deal with and have to think about. So it's and we can get into that, but you did pretty good on your intro, and I'm very happy to be here talking about bonds. And there was going to be a day we were going to get here, and we're here.
Exactly. Yeah, because and that we've been highlighting on previous episodes things that people were not aware of. For example, there's something called the Court of International Trade, right? The CIT. All of a sudden, everybody knows who. Well, I should say everybody, but all of a sudden now that's something that people know about, right? Because that's where a lot of these tariffs are being challenged, and rightfully so. People are discovering things like free trade agreements. All of a sudden, they used to be ignored, and now they're saying, well, that actually may be a good idea to use those because now I can bring things duty free on the stack duties, not necessarily just on the regular duty. But anyway, so now the bonds. I mean, needless to say, it's something that people may not have been aware of, that there's no way you're going to bring something into the United States, commercially anyway, without that bond, because CBP wants to make sure that they're going to get paid. So I'm really glad to see that. And I'm looking through my notes again. Like I said, I'm not nowhere nearly qualified to even be an expert in or anything like that. But, so I'm going to need you to carry the show here. But so let's start with, I guess, just the basics, or not the basics, but let's start on just a little bit of background. Um, IBNM is strictly on international trade bonds. I'm assuming nothing else, no other business industries. Is that correct?
Well, we actually operate in a couple different ways, and we're we've been around for 40 years. We're celebrating our 40-year anniversary next year, but we our main core function is as a surety for customs surety bonds. So we also act as an insurance broker in a different division, where we offer marine insurance, business insurance, errors and omissions, professional liability, cyber insurance, all these things that come into play for logistics professionals. So we have a full suite of products that we offer. And, I'm across all those as a senior VP of the company in business development. But, the bonds have been sort of the thing that and it's all kind of interrelated for logistics professionals. So they might call on somebody like IB&M to do a full evaluation of their exposure, their operations, and say, okay, maybe you need to look at your limits for insurance on this. You're operating a warehouse. Maybe you need to think about, covering your exposures there in a different way, depending on you running trucks or you asset based or non asset. So we do risk. We do a lot of risk evaluation, but the bonds have become this sort of exciting topic for the first time in a really long time, which is kind of, got me talking to a lot more importers than I ever would have, because we're usually behind the veil. We're the surety, so we're reading financials, approving bonds, and we're interfacing with custom house brokers, and they're usually the delivery point of these bonds. So it's now become this thing where they're asking us as the surety to come onto these calls and assist them to help this bond get situated, because it's complicated. You know, they're looking at financials for the first time. They're being asked. So maybe they had $100,000 or a $200,000 bond for a long time, maybe only a $50,000 bond, which is the minimum requirement, right? Now all of a sudden these duties have kicked up, and customs is super fast and said, hey, this bond is insufficient. You now need a higher bond. So now you're in the $500,000-$600,000 bond. Customs wants to make sure they're going to get paid, like you said, Lalo. So that's the number one thing that these bonds are doing. But now you've got the surety companies coming and say, hey, we might want to look at your financial security and your financials to see if they support this bond. So now you're getting CFOs involved, and different members of the importer or employees of that importer that are getting involved. And the customs brokers want to keep things flowing, right? So they're the in between. And then we're working with them to try to help get this bond situated so they can go back to just doing business and enjoy all the benefits of the bond.
It's really interesting that you also mentioned how you also ensure like errors and omissions, risk mitigation, stuff like that, which is really another part of the business. Like the consultants, for example, the software companies that service this industry may actually need to also take a look at what's going on, because maybe the liability might be a little higher nowadays, right? If they're advising or providing services, and if there are any errors and omissions, and sometimes even unintentional, in my opinion, because you might have not missed but misunderstood a tweet, let's call it, or a regulation or something, and you do need to protect. So it's beyond bonds at this point. It's also the service providers as well.
Oh, sure. I mean, it's a great point, Lala, because most a lot I should say most customs brokers carry errors and omissions, and most companies in general carry professional liability insurance, which is your services offered. You make a mistake, third party suffers a financial loss and holds you liable. So that's where the policy kicks in, and will defend and appoint attorneys if necessary, and defend and pay a claim. But there's a lot of blurred lines here in this new environment, because now importers expecting that customs broker to give them advice, and to, these tariffs and these changes are happening, and the software companies are like a godsend because they can usually handle this stuff pretty fast, right? They can say there's a new tariff and on this commodity, and they can get it all organized fast. But as a customs broker, you're being asked to do a lot of different things and step out into a different place that maybe you're not comfortable with. So, us as an insurance broker, we always want to kind of talk through that and say, how do you have a separate company set up that's a consulting arm of your company, or are you just operating as one entity? And that's important because you definitely want to have coverage, especially these days because of what's happening. And look at customs. They want customs brokers and these companies to have a cyber response plan, right? So now companies are looking, a lot of companies don't know that cyber insurance handles a lot of that for them. So that's starting to be a product that's evolving for insurance too. It's like, I got to get cyber. But errors and omissions, Lalo, is a huge, I mean, we've seen an uptick in requests for that coverage, and for the cost when it's in relation to your operation, it's almost a must. And like when we take on new customs brokers and look at those logistics companies, we always ask if they're covered by E&O, and we always want them to be covered because it's in case they're sued, they'll have that protection. And in this environment, I don't know how your company not having that coverage.
Exactly. No, yeah, I totally agree with you. Yeah, and as we dive into consulting here at Global Training Center, we're in the same situation. Is like, okay, so now we need to take a look and not reevaluate, but assess what we currently have, and that's why it hit a note on my head when you said that. I was like, oh, I guess I should cover that as well, because there's a lot of service providers that tend to listen to our show, and that they, we need to kind of remind them, that's the possibility.
But
So go ahead.
yeah, that's something we always tell companies, though, is every couple of years go back and review everything, right?
Hmm.
Because you don't know, there's new products out there. Like even running a show, like you're saying, there's certain coverages that mightn't be available that weren't directors and officers and different things. So, we always say every couple of years go back and do an evaluation and see if what you got, if it's sufficient and all that. And it can't hurt. At the least you learn something through the process.
No, exactly. Yeah, exactly. Yeah, that's true. Yes, yes. So let's look at like the main focus of the episode and talk about um, what's going on today with tariffs. Of course, I'm not going to ask you to explain any of the tariff stackings or anything, or how the duties or anything are applied, but let's talk about the current situation. And because of that, how is that affecting the bond market or your bond businesses? Like how is that just like how is that amplified, let's even say, or magnified for you all?
Yeah, the bond industry is in experiencing some unprecedented times right now. I mean, you have April that happens, and then you see this big increase in tariffs, right? So this time around, it's not just one region. So now you're talking about the entire importing community, Europe, Canada, Mexico, South America. So now everybody's involved. So you have a much more wider scale challenge for the importing community. So you have these importers that are now paying higher duties. And then as the months and weeks progress, you see these bond requirements now being much higher because as the duty rates go up, the bonds need to now go up to match that. So the formula for calculating the bond is 10% of estimated annual duties, taxes, and fees. Okay. So now you have these astronomical increases in duties, and you have these higher bond requirements. So every single month, customs is very automated in their A system. So every single month, they're calculating the duties and sending out letters to these importers. And these importers now have 30 days to increase those bonds. Now, for some importers that are the more sophisticated, larger importers, they're used to this game. They know this playbook, showing financials, indemnities, paperwork, stuff like that. They get it. But now you're talking about a huge importing community that's never been exposed to this before, showing financials for the first time, getting their CFO involved, planning on which bond amount to go with, getting this tariff team together and forecasting the right bond amount. And they're just not experienced. So a lot of our day is spent educating these importers that have never experienced these high duty rates and these higher bond requirements, and that's taking a lot of time, and that's become a lot of the challenge, I think, for all the sureties, is educating these importers on, for the first time, looking at financials and them needing to, even in some cases, post collateral where the financials don't support the bond. So that's I think, in a nutshell, where a lot of the challenge is happening, and why these bonds are now a big topic of discussion, because you know without the bond you can't have immediate release of the cargo. So you get these importers at any situations where they can be tense, because the supply chain is now, the potential is the supply chain is now coming to a halt until we get this bond situated.
Yeah, exactly. So just a little sidebar here. I was at an event earlier this week, and I don't know if it was there that I heard it, or I might have picked it up listening to maybe another podcast or something. But that, correct me if I'm wrong, but that maybe like the first $1 billion bond had to be written recently. Is that true or not? Or I mean, because
Yeah,
it sounds ridiculous.
I know there is I know of this bond, and yes, there is this bond, did exist, and it's like a mythical thing. Without saying too much, we were partly involved in that,
Okay.
and trying to help them procure it. But it is a crazy, kind of number to hear, right? Like, and
Yeah.
and that was really more involved in de minimis rule. So
Okay.
the de minimis, as I'm sure most of your viewers know, how that works, and how that is going away, in a few days, I guess. So you have all these shipments for some of these companies that were e-commerce, taking advantage of the rule, and now duties are now being going to be recorded, and there's going to be a spend for billions of dollars, right? So
Right.
we're working on bonds in the hundreds of millions on the regular, weekly
Wow.
now. So, and these were like way much an outlier, 10 years ago. It was like there was just a couple of them in the whole country. And now
Hmm.
this has become a very common thing. But yes, the $1 billion bond, it's funny you mentioned that, because that's a very much a real, it's not just a myth, it's a real
Yeah.
thing.
So we can call
But
that
yeah,
the
what's that?
I was gonna say we can call that the unicorn bond. You know how they
The
do that
unicorn bond.
with startups? They become a unicorn when they hit $1 billion valuation.
Oh
When a
yeah, yeah.
startup hits a $1 billion valuation, they
That's
call
the
them the
one they're all
unicorn.
that's the venture capital. What That's what they're
Yeah,
looking for, is the billion
yeah,
dollar
that's the
valuation.
unicorn. Yeah, and so we'll call this one the unicorn bond.
It's
So
the unicorn. And you know what? Look, it could be here to stay. I mean, I don't know how things are going to change with the de minimis rule. We don't get political, or we don't, that's not what we're here to do, but it looks like that rule, then there was some challenges in the trade industry about that rule and being abused, and that bond might be, that unicorn might be, have a long shelf life.
yeah,
You know.
exactly. So you brought up something real interesting that I hadn't thought of, and that's all the e-commerce folks that are used to be um enjoying the privilege of that de minimis, that $800 dollar or less shipments, who um, didn't really have to worry, I guess, about a bond. I mean, they just went on their merry way, and imported stuff and shipped directly to the consumer. Maybe, maybe not. I mean, that's depending on your sales model. But if it was under $800, you didn't have to worry about that. But now, I mean, $20, you have
Yeah.
you're gonna have to figure it out, right? I guess you're gonna need to get a bond. So my assumption, right? I don't know, is that correct? I mean, all of a sudden you're
Yeah.
gonna have an influx of customers.
Yeah, well, I mean, look, it's the big players, right? So like it's a great point. It's like there are companies that are at small scale where this isn't going to affect their bond as much. There'll be duty payments required on those entries. But it's really the bigger players you're seeing in the Wall Street Journal now, like, and hearing about these bigger companies that are massive e-commerce platforms, that are deeply, because they've consolidated this as an importer of record. And now, so that's taking their duty numbers and just, going way, off the chart. So like now you're calculating duties on billions of shipments a year. So all of a sudden now that there's this bond requirement has become, and it's interesting you bring this up, because as an importer that's on this scale, you know, there's just not a lot of sureties that even want to get involved. and like even want to deal with the challenge of this, because there's a whole other set of things that come into play when you get into the hundreds of millions and paperwork and different things that are going on, even dealing with customs and getting the bonds filed. So at IB&M, I mean, we feel like we're really good at it, but it is challenging. So as one of these importers, there's really a small pool of sureties that will kind of come and try to support you on that. So but yeah, it's very much what you're saying, and these the de minimis rule is one of the biggest changes, you know.
Yeah, but even the small and mom and pop shops are going to need to worry about that. I guess that was
Yeah.
also, yeah. I mean, like even if you're doing low volume, maybe 100,000, 200 or 300,000, maybe under
Oh
a
yeah,
million
yeah.
dollars of shipments a year, you still now need to worry about it.
Oh, very much. It's just the bond isn't as much of a the
Right.
bond wave shouldn't be too high. You know,
Yeah.
it you should be able to navigate it. It's just, but yeah, very much they have to deal with the those duty payments and have to factor that into their profit margins and all that stuff, right?
Exactly.
It's
Yeah.
just the bonds don't go way out of control like the billions and the 300 and 400 million like some of these bigger players have to deal with.
Exactly.
Um,
No, yeah, I totally get it. Yeah. So, do you might I mean do you have you dealt with recently, like you were telling us a little bit about that $1 billion bond, and of course without naming names or anything, but do you have a story or a situation where you might have had a client, like was an interesting or a good takeaway that we can probably learn from on what's going on, like with what might have changed that now the y'all came in and helped them out with that.
okay, so a time we were able to help a client, uh, you know, just recently, we have a situation where customs broker reaches out to us and says we have an importer who needs a $1.5 million single bond. Now, immediately as a surety, we're going to have a lot of questions. It's a high value single bond, and natural question would be why don't they have a continuous bond, right? So they did receive an increased letter from customs, and they're working with another surety to get that bond situated, that $1.5 million bond situated. But they're going back and forth on a letter of credit and getting all the paperwork. The bank has a lot of questions, and the surety has a lot of questions, and there's a lot of paperwork. Meanwhile, they've got this cargo that's coming in, and it's just sitting there, right? So they can't clear the cargo. They have no bond on file. The customs broker's panicked because this is one of their largest clients. So they call us and say, "Can we figure something out?" So we always, even though wasn't a normal client of ours, we were more of a secondary. We were able to kind of look at the situation quickly, get on a call, strategize with this importer and this customs broker and say, look, we took a look at the financials under an NDA, and we were able to offer them a partial collateral option. And we were able to say, wire the cash now, we'll take cash collateral, which can get the bond on file within 1 day. Okay. Later on, they can decide if they want to convert that cash to a letter of credit or not. Now, that's up to them. But the fact is, we were able to come in and get everybody relaxed and calm because we were able to find a solution that worked better for that importer. And honestly, in that case, the importer was very happy and very relieved that this option was available because they didn't have a cash collateral option. And as a surety, we don't, the gold standard is a letter of credit because of the way bankruptcy laws are. But we accept it for our, trusted partners, and we do that as a service because we understand that sometimes that fits that importer's economics better. So in that case, I think we were able to sort of save the day for that customs broker relationship. We were happy to do it.
I guess my guess is you partner with other service providers to help you also understand the trade aspect, like the drawback. I'm sure you guys are not doing drawback. You're not a
No.
broker, so yeah. And so I'm sure you partner with other folks and everything. So how important, or how much has that increased for your business, like, or has it? Where you're now having to reach out to other service providers to kind of just get involved and help you with that.
It's a very fast changing landscape here. It's a great question to pose because as you know, we as a surety agent, we represent multiple sureties, right? We have
Hmm.
to because we have to service these clients that have these needs, different varying needs and different limits of bonds, and each surety company has maybe a different appetite. Where somebody's, on perishables, they're okay, but like on wearing apparel or alcohol, tobacco, there's everybody has a different niche, but
Mhm.
like we very much are always, and we've always been about partnering with the logistics professionals and other service providers. Like it means everything. So it, it, well, my financial underwriters won't like me saying that. They're mostly focused on the financials but for me and the team, we get together and we talk about it. So like
Mhm.
it's very much about the logistics provider involved, um, their history and track record of compliance, and then we're like a team kind of trying to decode it, and we're saying, okay, what let's look at the organizational chart. How long has this customer been yours, or how are their payment habits? What's your sense of confidence, in their
Mm.
compliance model? Has customs been, has their track record with customs perfect, or have they had issues where they've had to work through and hire customs attorneys and try to figure out problems? So we really depend a lot on these other companies to help us underwrite options for the
Okay.
bonds. Because at the end of the day, that's all they're really looking for us. We don't do anything, when it comes to the trade, we're like a back end support for the whole thing to make sure the cargo never stops,
Mhm.
because the bond is what gets you the immediate release of the cargo or gets you the accelerated drawback, that you're eligible for. So it's really, we're just kind of like never seen in the process, but lately it's really becoming more, hey, we need you to jump on the call. But like the customs brokers are really the heroes of the situation, because they're kind of pulling it all together, and like they're giving their expertise, providing information with the importer's permission, and solving helping solve the problems. So it's like a team sport. It's not like tennis where you're out there by yourself. We're like a
Right.
football team. We've got blockers, we've got receivers. I probably would have been on the line. I'm a bigger guy, but like, and not that's, whatever. But yeah, it's a team game for sure. And like, it's as a surety, we're just getting more involved with the bond requirements. We're just getting more and more involved because people want options,
Yeah,
and time.
there used to be a commercial that do you know that company BASF? I think that's who it was. That they used to run a commercial that said, "We don't make the products you use; we just make them better." So, in other words, they're in the background. That's what you guys are. You just make sure that shipment's coming through.
Yeah,
Um,
it's funny you say that, because it's like we'll have this little joke around the office where we'll be in really, spending a whole week on one particular bond, and it's so challenging, and there's people in Europe and people in South America, and we're just on these calls and calls and calls, and finally at the end we get the bond written, and it's like the $10 million bond is on file. And then I'm like, we'll sit around the coffee room and be like, do you think they even care? What we did here? Like, probably not. They just got their bond. We'll never hear from them again. But that's kind of that's the job we chose.
yeah, exactly. They're just glad that they're able to import. I guess. So,
Need to
yeah.
import. They need to have their, be on statement and get those entries cleared
Right,
and
right.
ISOs.
So you're basically the I like to use this term a lot. You're the Yoda and not the Luke Skywalker. You're helping someone else look like a hero. So
Yeah, but it's a good point in a way. It's a joke. It's like, but we're really educating a lot of the day these days. And like I talk to
Mhm.
customs brokers and importers, and they're like, "You guys, thank God you guys just picked up the phone and talked to us," because people have all these questions, right? They're
Right.
like, We want to explain our financials to you. We might be under a non-disclosure agreement, but they'll say we want somebody that'll hear us out." So like it's we're doing a lot of education as to like what we're looking for as a surety. We're always concerned about anti-dumping and certain things that could be post challenges and transshipments and things like that. But we're really like spending time educating logistics companies about the bonds more now, and the importers themselves. We're talking them through what we're looking for, and then everybody kind of breathes and says, "Okay, we were able to discuss this. We have options. The world's not going to end. We can still import, but we may have to, do a little bit more work here to get it done." But yeah, it's there's an educational component to this. And I don't know if everybody wants to get educated by us, but they're kind of forced to a little
Yeah.
bit in these situations. It's like they would prefer to have everything as smooth as possible.
Exactly. Yeah. What is like? a good piece of advice that you feel is important right now that someone needs to be aware of?
Okay, I'll play Yoda. So if I could give some advice in this situation, it'd be like, one, hire a good customs broker that understands things and is good reputation. You know, and really, when it comes to the bond, the main thing you can do is don't take the bait on the number that's on that letter from customs. So you're going to get a letter, and everybody wants to do the right thing, especially when it comes to customs. I want to make sure I'm compliant, right? The
Hmm.
number on that letter might not be the right number, and
Oh,
usually isn't. So just get some people in the room if you're an importer and open up an Excel spreadsheet and say, I want to look, and you could do this with your customs broker or with your surety, however you want to do it. But look at your last 12 months of duty spend and try to break it down by month if you can. And then on the other side of the sheet, have your next 12 months of what you expect to spend in duties. Okay. And this could be a complicated task depending on how sophisticated of an importer you are. But if you take the time, it's going to save you a lot of time and money and headache in the end. And take that number on the forecast and use that side of the chart to try to determine what the right bond amount you need is. And then try to have a crystal ball and see what the administration is going to do.
right.
But you can't do that. So all you can do is do your best job to sort of anticipate what those duties might be, how your business is changing, different commodities, different products. You're trying to get to that number and look at the spike in your duties and try to forecast 10% of that amount. And that's going to tell you what bond amount you need. And give yourself a little cushion, because you don't want to be on that naughty list from customs, when it comes time. You want to have it. Customs wants you to have a bond. Okay, they want this to go smoothly too. So that would be my advice: is work with a good logistics professional. Have a surety company that can handle all different bond types and has solutions and is willing to take your phone call and talk through this crazy thing. But at the end of the day, look at your numbers and get your numbers down,
Hmm.
and go a little higher. Don't, it might save you a few bucks, but go a little higher because that'll just make the rest of the next 12 months go a lot smoother for you as an importer.
Nice. And to me, that is the soundbite that we're going to get from the show. It was perfect. Anything I might, yeah, exactly. Yeah. Is there anything I might have missed or you might want to wrap up with before we say goodbye?
No, I really appreciate you having me on the show. And like I said, I've become a fan of what you guys are doing. And it's exciting that you're seeing customs brokers in the Wall Street Journal and like
Right.
the trade being talked about. So I think it's great timing of what you guys are doing, and I've become a fan. So this is my big moment of being on the show, and you made my day. So thank you.
Awesome. Well, I'm glad we did, and that's why we came up with that sticker. And I always ask our producer whenever we mention it, just flash it on the YouTube feed as a sticker that says, "I was in trade when trade wasn't cool." So so
Yeah, I love that little thing when everybody comes on the show. They have the trade nerd and all that
yeah, yeah,
stuff, and like everybody's a trade nerd, and that's like being cool now in trade.
yeah,
It's like,
exactly, yeah. Yeah, but tell them you're in trade insurance and bonds, and that'll change the conversation at a barbecue or at a dinner party or something, right? I think it will.
maybe I'll have a sticker that says I'm a trade nerd and a bond nerd,
Yeah,
and see how many nerds I could be in one tag. But
exactly.
yeah, thank you very much. Though it was
Well,
great.
sure, Jason. Well, thanks for joining us, and thank you all, everyone who listens and shares and follows our show and all that kind of good stuff. We really do appreciate that, and we're glad that we're able to bring this kind of content to you all. And with that, that'll be the pod for now. Thank you all. Thank you very much for joining us. Simply Trade is brought to you by the generous contributions of Global Training Center. You can follow the show and GTC on LinkedIn or Twitter and other social networks. Make sure you check out the show notes in the description for a full rundown of today's show with all the important links. Also, make sure that you share this with a friend and subscribe on your favorite streaming platform. We really like hearing from you. If you enjoyed the show, make sure to rate and review wherever you listen to this podcast. If you or someone you know would like to be a guest in the show or would like to sponsor Simply Trade or suggest any topic you would like for us to discuss, please contact us via email at simplytrade@globaltrainingcenter.com, or you can DM us on Twitter at simplytradepod. Thank you again for the privilege of your time. Happy trading. Simply Trade is not a law firm or an advisor. The topics and discussions conducted by Simply Trade hosts and guests should not be considered and is not intended to substitute legal advice. You should seek appropriate counsel for your own situations. These conversations and information are directed towards listeners in the United States for informational, educational, and entertainment purposes only and should not be substituted for legal advice. No listener or viewer of this podcast should act or refrain from acting on the basis of information on this podcast without first seeking legal advice from counsel. Information on this podcast may not be up to date depending on the time of publishing and the time of viewership. The content of this posting is provided as is. No representations are made that the content is error-free. The views expressed in or through this podcast are those of the individual speakers, not those of their respective employers or Global Training Center as a whole. All liability with respect to actions taken or not taken based on the contents of this podcast are hereby expressly disclaimed.